Hi, it's David here with Futures Trading at 79 subscribers. Welcome aboard. We had 77 on the last video. I've been kind of giving you guys several videos here because come January, I will be refraining from doing as many uploads. I just want to make sure that I'm giving you a library that's full of just information, all the stuff that you would need in order to do this. New trader. I want to make sure you can find your way in the channel here because it's a library. You can get caught up here. If you watch that video, you can absolutely get caught up. If you've been doing this for a while, I suggest you watch this. All right. So if you're still struggling with trading, I want you to watch that because we want to help you. I absolutely want to get this done. To my fellow professionals here, there's of course so many of you that have been helping grow the channel. Dimitri, Santiago, Yana, Payman. There's quite a few of you, Mark. There's quite a few of you that has constantly implemented the professional etiquette of, of course, liking the material as well as commenting, and I just want to acknowledge you right now and say thank you so much. We are growing this community together. I wish there were more of you that would definitely let us know who you are so that way we can celebrate you as well. But there are several of you that's actually committing to hitting the like button. So I'm actually starting to see the videos kind of have right about 6 or 7 likes consistently. All right. So much. So much is going on in the trading field, and I'm just really glad to be amongst fellow professionals. So I'm glad that you guys are carrying those that I know of. Again, we have 179 subscribers. Want to see at least 10 people that's committed to caring about others here. We don't want to have a community of a bunch of selfish individuals that feel that they're entitled to the best that others have to offer. All right. So I just want to acknowledge those that have been giving to others. Thank you so much for doing so. It really means a lot to me, if not the people that's here. All right. It means a lot to me. Now, again, if you've been doing it for a while and you've been having some trouble, I really want you to take a look at this because I don't want you to quit. Now, the new trader, I'm going to touch on some stuff about your experience as well as this individual here that may be at that point of wanting to quit. But this video here, I'm gonna include this below the video as well, so you'll know that it's a social thing that happens with trading. It can affect you in a very negative way if you don't know what to do with it. All right, so I'm gonna kind of put that below there. Again, 9 minutes. 9 minutes. I'm gonna give you some information to kind of help you know why it makes sense while you're dealing with that information there. All right, so welcome to the channel again. If you're new to the channel, again, thank you for stopping by. If this is your first time, if you're a returning visitor, we again welcome you back. And again, just take a moment, if you don't mind, come through some of the information. You may find something of some use, or even what I may say right now. All right, so now let's get into it. Mentorship. I always try to give you guys definitions so you can follow along, with the mind of who I am as well as the market. And so the mentorship. Really important word. A mentor is someone who teaches or gives help and advice to a less experienced and often younger person. I don't care how old you is, it don't matter. It's really just giving advice, someone that teaches or gives help and advice. Now, here's the thing that I always tell people. If or gives help and advice. If your advice cancels out my help, how are you a mentor? If what you're telling me won't help me, then how can you be a mentor? Just want to put that in front of you. Now, the channel is not here to mentor you. The channel is here as a library. All right. Mentorship is a whole nother facet of interaction. All right. Of course, everything that we do is transactional, transformational. I know that the information on the channel, I'm not getting paid for it. So it's transformational. I'm just trying to transform how you look at the chart. There's no transaction, right? Just want to state that to you. It's all free content, and I want to make sure that you can see the chart very objectively. And I think you can do just fine with the free content. I absolutely wholeheartedly believe it. I wouldn't have put it online if I didn't think that you could succeed with it. So I want you to know you're in the right place, and I'm glad you're here. Now, majority, let's look at this word. Of course, my fellow professionals here, as well as the other subscribers here, we've been looking at this word, okay? And I want you to look at it too if you're new to the channel. Majority is more, just right here, is more than half of the total. Now, the majority rule is this. It's the principle that the group which has the most supporters. Now, this is going to deal with what we're going to do moving forward. get to decide the rules that all, including any opposing minority, will be compelled to abide by. All right. So they're in control. Really important stuff. Now, let's just, matter of fact, I'm going to just kind of get this out your way here. Really important stuff. So, majority rule is important because when you're dealing with the chart, and we're going to go over a lot of this stuff right here, but when you're dealing with the chart, the trend is very important as well as the universal bar pattern. So the universal trend and the universal bar pattern is very important because it deals with majority. Deals with majority, more than half of the total. Remember, it's more than half of the total. And so if more than half of the total is in control, then they control the minority. Okay, so they get to dictate the rules of what we're going to be doing moving forward. So I really want you to understand the power of that word majority. It's really, really important that you do that. You can go back and dive into that and read it a tad bit more in its entirety. But I just wanted to give you something really simple to grasp. Grasp that, and I guarantee you'll start looking at the chart in a very different way. Now, this is who we are. Now, I've been covering the mind in the last few videos here because it's really important that you get this. You will not succeed at trading until you do. I can assure you, you can keep, doing this and finding yourself kind of treading water and barely getting where you want to go unless you begin to understand the mind of who you are as well as what the market is trying to tell you. Now, there may be people that's not looking at it or can't draw the parallel based on what it is that I'm trying to disclose to you. But as long as they listen to the market, they can succeed. So I'll say it that way. Now, thought, action, habit, character, destiny. All right. Now, this is us. This is what we're doing every day. The mere fact that you're watching this video is a proof of this. All right. Now, the outcome of it, you can't control it. Now, you can't control what I'm going to say, but, it will affect you. All right. So you have to trust in the function of it because you can't control what I'm going to say. All right. Now, there's a thing called fluid intelligence, and all of, in a nutshell, I'll just tell you what it means so you don't have to go look it up. It just deals with being able to make decisions fairly rapidly, if you will, without any prior knowledge. In a sense, it's more or less adaptation at best. So now you can go look that word up if you want. I covered it in other videos. Just don't want to do it here. The market is, of course, like us. It's like us because it came out of the mind or minds, a collection of thoughts coming together in unison to put together something that's advantageous for them. Now, the market, the participants create outcome, and they have designed the function to ensure that that outcome will happen. Now, there's a fluidity, about going about the market, the ups and downs. It's a fluidity, it's a function, and that's how it moves. Now, of course, the way to read the bars, okay, we're trying to get majority. That's all this is. You're just trying to get majority to clear the prior bar. Now, you can go ahead and get in it if you want on this bar, and look for that follow through if you like. But you really want majority to take control. Really important that you do that. And I just showed you why, because then they dictate what the minority is going to have to do. All right. And that's follow them, in other words. And so that's what this is. All right. Now, that no close, no touch is a real time process. I'll try to point it out to you in the amount of time that I plan to be here. I'll try to point it out to you. This is a 1 minute chart. Usually I'll do it with like a 15-second to kind of give you a chance to see what that is. But if that black horizontal line falls below the low of the green bar, which it's doing, typically that'll be the hard stop. This will be the no close level here, and it should just continue down. And again, it's all about that black line, which is the halfway point, uh-huh, beneath the low of that green bar. All right, so it's just majority of the bar is beneath the low of that bar, and so it should continue down. Now, let's dive into this information right here because I really want you to succeed with trading. I want you to succeed. And that is the main reason why I put the channel together. All right. So, but I know there's a lot of people that want to do this part. Now, unless you earn the right, and when I say earn the right, you can effectively trend trade. I want to encourage you not to do it. Absolutely. There's fellow professionals here that's great at it. Okay. Because they earn the right to do it. They can actually do it because they earn the right to do it. All right. If you cannot effectively trend trade, I'm gonna need you not to do this at all. Now, this is the reason why, and it's just logic. Let's look at it together. To counter a trend, you need to know what a trend is. Really important. Because if you're going to step in front of the trend, which is you stepping in front of the thought of the thought, because remember, the market is participants. So if there's participants, there's a thought, action, habit, character, destiny associated with that. And so we can't control the outcome, but these guys, they've designed the function to ensure that it will absolutely take place. So if you're going to counter the thought of the market, how it works, and say, hey, I'm going to get in front of this and see if I can get it to go back in the opposite direction, you're going to try to change their mind, and they themselves haven't changed their minds. I don't know your, like I said, your batting average with that. You know, how many people you've been able to convince them to change their mind, especially when they don't need you. And see, that's a whole nother unless you're providing that kind of interaction to the market. I know, and I know, we as people, we can influence each other, but here it takes a little bit more than just personality to get that done, charisma or whatever you want to call it. And so it's going to take a lot of capital to get markets to turn. And so I want to just propose to you, if I can, if you know what a trend looks like, it's really blatant right here. I wanted to make it as big as I could. If I could have, I would have covered up all the words on this page and just say it to you like this. Why can't you profit from it? Now, if you know what that trend looks like, why can't you profit from it? If you cannot profit from the trend, I suggest you don't counter it. Please don't do it. I want to encourage you not to do that. I want to see you become successful and get wherever it is that you want to go with your trading. Now, there are some questions that people would like to ask, I'm sure, when it comes to trading. And I tried to just think of just a good, I don't know, two or three of them. Well, it's about four of them here to kind of help you kind of get an idea of what it is that you're about to encounter with trading. Again, don't want to be before you long. Let me just slide this over just a hair. And then we're going to talk about this diagram because it's really this. I mean, you can kind of see it, but we'll talk about it a little bit. How long should I be at break even or worse? 90 days. It's like a job. 90 days. Most people, they get on a job, they got a trial period, they see, can you retain, I guess the occupation long enough to, be an asset to the company. And so you kind of get that window there, and they can decide. Some jobs is at will; they'll just get rid of you. There's no contract, no obligation that they have to keep you on, or anything like that. And there's no specific reasons that you would need to be fired. So, but 90 days. Don't come and do this as if it's anything different than any other job. And yes, I'm a self-taught trader, and this is why I'm telling you this. This is why I'm telling you this because I can assure you there is so much time, and it's not even the money. You can never get the time back. Time is invaluable. You'll never be able to rewind the clock. The money, you can absolutely get the money back. It's the time. You can never get it back. And I don't want to see you lose time. So if you're at a place where you're beyond the 90-day mark and you're still having trouble, please retain the information on this channel. I would say that absolutely, bar none. This free information would absolutely, bar none, get you beyond break even. Should you not counter trend? That's the most important part of it because the channel, and I'll put it in front of you just one more time so you can see it for yourself. The channel is all about universal trend. It's all about universal trend. Now, I did provide, again, some trend failure tips, and I don't have no problem with, of course, sharing that information. Some of it anyway. Of course, there's a lot more to countering the market that I'm not trying to teach anyone for free, clearly. But there's the 90-day. I think 90 days should be a good market for you. So if you're wondering, what that is and how long should I be, having a hard time or struggling with trading, I think 90 days is good enough. I do. Let's go and look at something else. All right. So does it take a lot of money to become profitable? No. You can double whatever it is that you put in your account. Yeah, I said it. Now, there may be people that disagree with me. I'm not talking about starting with $100 and being a millionaire by, I don't know, a year later. If you do what you're supposed to do, maybe. I don't know, but I can honestly tell you this: it don't take a lot of money. The brokerages the brokerages out here, they're available to anyone that has, and they're even trying to reduce contract size as far as how much it costs. They're trying to make it so affordable for anybody to trade. So you can get started with little money, and I'm not affiliated with no brokers, so don't ask me to tell you which ones because I can't do that because I'm not affiliated with none of them, and I don't have any kind of IB agreements with none of them. I don't do that. So you find one that you would like, whoever you want to be a part of, and then work yourself from that angle, and hopefully you can get where you want to go. It's a lot of risk associated with it. Again, I'm not telling you to buy or sell anything. This is only my opinion of the information. Now, so no, you don't need a lot of money. You can start with something reasonable, whatever that is for you, whatever that is for you. And as long as it aligns itself to the broker's requirement, then just go ahead and utilize some trend trading skills. It's a very useful way of going about making the money. And then once you've earned the right, then maybe. But again, you're not going to change the outcome. You can't do that. You don't have what it takes to do that. Again, personality won't get it done. You having a great idea won't get it done. You can't even get that to show up in your own life. Think about it. I can't do it either. I cannot force an outcome, to show up in my own life. I can't. So what makes me think I'm gonna come to the market and make it happen? I can't. So I just align myself to the market's goal, the market's thought, and follow it. That's all I do. All right. So hopefully that answers your question in there. Which is most important, historical or real time? Neither. Again, there may be people that don't agree with what I'm about to say, but historically, people like to put a lot of emphasis on that. And you can, if you interpret the chart that way, you can absolutely trade that way. People will put a lot of emphasis on real time. If you interpret the chart that way, you can trade that way. So it's neither. And the reason why I'm saying that, and this is my being experienced, having traded over the years, there are some pivots that they'll absolutely run through that I would suggest to you, no matter who's telling you, hey, there's a pivot over here, take a step in front of it, go the other way. It'll run right through it. So, no. And of course, it's going to turn inside the frame of the chart with prior pivots already inside the chart for the most part. And there's times where there's nothing to the left, of reference, and it still would turn. And that's why I try to teach you the universal chart scale, because sometimes there's no pivot nowhere in sight that you can, reference, and it will still turn. Like if the market took off to the upside right now and blew past this little green bar and then decided to come up here and turn around, I would just tell you, hey, it's the center of the chart, and there's a good chance. And it has nothing to do with this whole, support being resistance. Or it could come up just about right here, not even get nowhere near here or touch this area right here at all, and then turn around and go back down. And I would tell you that's the lower part of the chart. So if I were to divide the chart in half like this, okay, and I'm just giving you a brief example. If I was to divide the chart in half, I would tell you, hey, if they came up here, turn back around, they never touched this. So how I don't go with that whole support being. I don't do that. I don't think of the market in those terms. I really don't. It's not to say that it's not applicable. I just don't. I don't look at the market in that manner. That's all. I look at it as thought and thought alone, because this is a place of decisions. Every price level is a decision. It's always decisions being made. And so if it's a decision that's being made, it's always this process going on constantly. Constantly is always this. And I don't see the chart based on that open highs, lows, close. It's not really that for me. It's always just decisions that's being made. There's always somebody's goal in mind, their outcome in mind. And fortunate enough, you can see whenever you have a thought, and you can just see it for yourself, the thought will look like, your character, your habit, your action, and very much so it will be the destiny in which you'll wind up. And so that's it, they look similar, if you will. And so when you go to have a thought to do something, it's present with you currently what you see yourself having. So the outcome is actually present with your thought. It's already available to you, to inspire you, if you will, to try. And so when the market begins to move, the market knows exactly how far it's going to go once it starts. I want you to wrap your mind around that. The moment that it makes the trend, because the thought is the trend, the moment that it makes the trend, it already has available with it inside of the thought, the trend itself, the distance in which it plans to travel. And that's why I say, why counter the market? Why counter the market if you know what a trend is? Why counter it? You should already know how far it's going to go based on what it's suggesting to you. And so, historical, no. Real time, still no, because once the trend is set, historical information takes over. To get to the destination, real time is relative. And so neither is more important. All right. So I hope that that helps in some degree why I don't deem either as being so important. Neither is being so important. It depends on when are you going to pull the trigger? When are you going to get in and where do you supposed to get out? And that's when you'll begin to, because the market is fluid. So it's when you go to make that choice and where do you want to exit, because you have to be in there for a certain amount of time, and time is weaponized in the marketplace. I don't know if you understand that, but it is. And I'll try to explain it to you really briefly. I play speed chess, 60-second games. When I know that my opponent is better than me, I begin to move faster. My moves are shorter. I don't reach so far across the board. And so I weaponize the time. I use the law of recognition against them. So the faster the game becomes, the less likely they'll be able to recognize the potential of the threat. And so I begin to move at a rate that I know I can of course see his decision making as he's moving. I can see how long it's taken him to move, and that plays into my advantage if I can beat him on that level versus the level of skill. And so the marketplace has on the bottom of your chart, it has time. And so it's happening in front of price. So reading that hard right edge becomes, a issue for most, because you got to be able to get in it and get out of it without it becoming a weapon against you. And it's not that they're intentionally trying to do that to you. And when I say they, whoever, hedge funds, banks, institutions, whoever's in the market for that day, their job is not to chase you down. It only becomes a problem if you're not wanting to align yourself with their goal, because again, you can't influence them to stop, heading to the price level that they know that they're going to, inevitably, feel they're going to get to a particular price level. They know that it's present with them when they place their money at risk, which is to them, it's they're going to ensure that they're going to get what they need accomplished, and they can manipulate the levels all the way through it until it averages out to being what it is that they need. Now, time is weaponized. It can be, utilized against you. The market can slow down, not move as fast. You can see the acceleration, and then it can back off and not be. That's a whole nother topic. I don't want to get into that, but I want to let you know neither is important. They're only significant because there is a chronological significance to our life. If you look at the definition of time, it has irreversible in it, and so there's a chronological significance there. It is, but I want to tell you, if you focus too much on one, you'll ignore the other. And so now you're responsible for manipulating your own trust in the market. And that's the next thing that we're going to talk about. So if you put too much emphasis on historical, you won't trust real time. If you trust too much in real time, you won't read what they just told you. And so you need to be neither. There's not a bias to either. I'm okay with both. I'm okay with both. And so I want you to see the chart the same way. Now, can I trust what I see? And this kind of satisfied that for the most part, what I just said. But yes, you can trust what you see. And I'm trying to give you a way of looking at the market via real time. So I try to tell you historical. I try to give you both because they're both present. You got data in the backdrop. You got, of course, places where the market has turned, and I'll show you some other information that deals with the historical. I'm gonna show you some other information that deals with that. As I, tried to read it to you, based on the bar breaking the bars, well, the mid breaking the bars low, and you saw it went down even further. So now I'm gonna show you some other information that kind of course, highlights the whole historical aspect, so you can kind of go ahead and build some just some reference, if you will, to where it could potentially take place. Because I gave you an example of the chart scale itself. Now I'm gonna show you some numbers and some time windows that can better give you an idea of what they can do. All right, so let's jump into that, and then I will be out your way. All right, so now this is. Oh, but before I go, let me make sure I say this. Let me before I go to the next chart. Let me say this. This whole process, thought, action, habit, character, destiny, is all of what we do in our everyday life. And so the market moves the same way. And so if you've been on the channel for any amount of time, when I tell you what a trend is, I tell you that there's a trend distance. And so the distance of the trend is right there with the trend itself. And so you can kind of know that, hey, it'll go at least this far. But anyone that's been following me for any time knows that once it hits the trend, it tends to lean over, or hit the trend distance, it'll tend to lean over. And this is what I want you to understand about that. It's just like every decision we make, we have a process. So there's thought, action, habit, character, and then there's destiny. So if you're using trend lines, let's say you were using a trend line, or some kind of moving average of any sort. The problem with most people is that they wait until there's so much data, so many higher highs, lower, higher lows, before they want to interact with it. The problem is that when they go to get in the trade, they're getting in too late. And then they don't, I guess, shorten their expectancy. And so their expectancy tends to overshoot destiny. And then it ends up running against them. Now, that's really important if you're trying to counter the market, is that you understand where are you at in that whole thought process of the market? Where are you at? Because when the market turns, it knows exactly how far it's going to go. You're not privy to that information, and so you have to use a level of fluid intelligence to be adaptive enough to read the information without any kind of prior knowledge. So I just want you to kind of keep that in mind when it comes to countering the market. For one, you can't change the market's mind, because when the mind of the market is made up, it's going to get there. So you can't change its mind. So can you deal with the drawdown? And so if you are going to trend trade, if you do want to go ahead and trend trade, I want you to be aware of something. The sooner that you can identify what the trend is, you need to hurry up and go ahead and act. So you're not getting in too far into the activity that it may change where it's going. All right. So I just want to say that to you. And moving averages, trend lines, oscillate, anything that would suggest to you, you know, anything that would suggest to you what a trend is, I wanna go ahead and highlight this to you. Structure breaks, all that stuff, that's not what trends are. That's not what trends are, and you can check out the channel, in further detail. Now, again, I'll have that video below for the if you're new to the channel, to get you familiar with what it is that I'm trying to get you to recognize about trends. All right, it's just using price and price alone, and it's not always a structure break. It's not always that. All right, so and just to prove that, I'll prove it to you right now. So here we go. Off this bottom, we had one, two. It have to be closing higher. Three, four, five, six, and there's seven. All right, so there's seven. Okay. Now, the distance of the seven is actually your destiny. All right, so your destiny is this. All right, and all we do is we measure that seven and we do this. That's it. It's just that simple. All right, really, really simple. There wasn't a structure break. Is this structure? If you want to call that structure, but is this really? I mean, do you count this as structure? I mean, maybe some people will. Some people would definitely say is this, because look, if this one pulled up and then break this up here and turned around and went down, Uh, do you think for 1 minute that if it gets past this, that it's supposed to turn around, or get past this and keep going with no regard for what's up here? So if you're looking left, trying to do, prior swings, structures, then how would you interpret that? You know? And so I just go ahead and count because sometimes it can again show up without, it breaking, some structure. And definitely if it's a moving average would have been behind the candles trying to flatten out down here. And by the time this big candle would have jumped up, that's when you would have probably got the bend in the average. And then it just depends on which weight you're using. If you're using something faster, but that's again, to me, that's subjective information. That's all. And I don't want you to be there. Now, here's the static levels. Now, these are potential points for the market to react. Now, I did tell you guys that you want to see this run. I got to give a little bit of an alert here too. You want to see this run clear this high, the mid of it, and it did. So they're back here. They're absolutely back here. So hopefully it just won't come back in too far down, and then it'll just turn around and get back up. And they managed to do it without basing. So they managed to get there, without putting two bars down. So they only had that one, and they attempted to act like they was going to turn here, but they didn't. Now, what I'll do is I'm gonna adjust this zone for you guys. I'm gonna take and do that. Let's go green here because this is the target. Clearly, if they try to come back down, this would be the target. So these are static levels. If you're new to the channel, you can definitely take a look at that information. And of course, the bar colors. Any bar that has color in it, they're hard stops, and the bars with the text is the no close level. So they can, of course, not close under this bar, and then turn around and go back up. But there's price levels on your chart currently that they'll react to, and this is the chart scale. Again, something that I'll provide you for free if you want it, or for a limited time. The green line, the black line, and the red line, that's that thing that I told you. Hey, when you project the market forward, they're trying to weaponize time, and that's why the algos fight each other, trying to get the best price, before the other, and you get algos that spoof each other, trying to send the other joker on a wild goose chase so they can grab that level. And so there's, of course, that time variable where it's being weaponized, and I want you to be aware of that. So to be able to tell you how long something should last in the market is of high value, very high value, and I'm giving it away for free. All right. And again, I've been doing this professionally for many years, and I just want to make the public aware of something that's really simple, and you can go ahead and implement it and become profitable without a lot of terminology, a lot of specifications, if you will. I want you to do it effortlessly, where you can pull up a chart and just get a good idea of what should happen. All right, just using the information. So you can get this chart scale. It's really simple. And then again, there's some price levels that I make you aware of too. So let me kind of get this out you guys' way. And so you're getting a little bit of a reaction there. Now, this is the static levels. Again, a template that you're more than welcome to. You use the clusters here. You can kind of see the price levels here. Now, if you email me for this template, again, there's some prices that I have already set in here. This is a free indicator on NinjaTrader 7. All I did was punch in the numbers. It's called constant lines. But you can get the template. I'll get it to you with the levels already in it. You'll just have to adjust them should they travel outside of them. You'll just have to plug in the numbers, and have it all come together. So there's about 4 price levels to each one. So I actually had to add a lot of them and punch all those numbers in. I don't know if you feel up to doing all of that. So I kind of did it for you. So if you want the template, you're more than welcome to it. And then the 55 is always the target, which is again this. Just know that it's important. I'll just say that it's important. I'll scroll through it a little bit. I think I got a little bit of data here. Let me put a few days, and then I will be out your way. I just want to make sure that you guys that's coming to the channel that's new, that you have an idea of what the channel is all about and what you should expect here. We're trying to give you some free information. If you don't mind supporting the content, hit the like button. Hit the like button. Show a level of appreciation. Take some of the weight off some of the other professionals here that's wanting to help you. You're here because someone cared. No one is here, of course, that's better than anyone else. We're all the same. Okay. And I try to make that very apparent. And that's why I, have that standard that I want. Of course, if you're following that, you go ahead and begin to share the information, hit the like button because the algorithm would detect that this is a safe place to learn and suggest the information to others. All right. So we want to do that. The means of the range is important. The means they kind of got you in here today. This is this morning. That's the overnight, and it just kind of fought you. and just made it really difficult, if you will. But at the same time, you got to know what a trend is. You got to know what a trend is, and it can never be both. It can never be both. So let me just put a little bit of data here, just a little bit data. That's from yesterday. Kind of thought that they were going to a target down here, but they managed to go straight up. And I told everyone, that 650 was important. They managed to close above it, and so that's what you have. All right. So, but the ranges are important. Let me scroll through it a little bit more for you, so you can kind of see how that behaves should you want to use this information. Again, if you're someone that's skilled, and again, you've earned the right to counter trend, then these ranges are absolutely a good tool for you. It is. It really is. The static levels is a great tool for you as well. If you're someone that's skilled, someone that's already a profitable trader, trend trading. All right. Now, I don't know, of course, your reason for wanting to be on the channel if you're already aware of how to trend trade, because that's what the channel really is all about. But if you're someone that needs that help with trend trading, you're in the right place. All right. So didn't want to hold you any longer than that. Again, I wish you all the best with your endeavors with trading. And again, thank you so much for stopping by. Take care.